Hello, welcome to the European Open briefing for Wednesday, November the 23rd. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So it is we are seeing a bit of a calm in financial markets today, and this is mainly due to the US Thanksgiving holiday weekend that starts from tomorrow. It's also a national holiday in Japan today, so we are seeing lower volumes. The dollar rally appears to have stalled for the time being. Yesterday it touched 111.35 yen for the second day running, but was unable to advance beyond that level. The sell-off in US Treasuries appears to have eased a little bit, especially the 10-year yields. On the other hand, German bonds are seeing fresh demand, and this is on expectations that the ECB will extend its asset purchase program at its December meeting. Sterling has fallen back to around the 1.24 level after rising around the 1.25 level yesterday, and coming up later we have the UK budget statement, of course. Crude oil is down about 2% from yesterday's highs. We did have optimism early yesterday that there will be a deal, but there seems to be some fresh doubts around that, and that's pulling down crude oil prices. So let's start today's update with the dollar yen. We can see here that it twice touched 111.35 yen, but it's since drifted down a little bit to just below the 100, well, currently at around the 111 level. On the other hand, US equities are doing rather well. The main US indices, the Dow Jones, the S&P 500 and the Nasdaq Composite, they close at record highs for a second day running, and this mainly on the expectations that there will be a fiscal stimulus by the incoming Trump administration. And although we are seeing an easing back of the sell-off in 10-year US Treasury yields, 2-year Treasury yields are still continuing to make fresh highs. Yesterday it touched the highest since 2010. So that's supporting the dollar, even though it's not making any fresh gains. Coming up later today we have the FOMC meeting, and although markets are already expecting a December rate hike, the minutes will likely further reinforce those expectations. If we move on to the euro dollar now, we can see that the euro has been fairly flat, so a little bit volatile. Yesterday it touched a fresh 11 months low below $1.06. It's back above that level, although it is overall looking very bearish because of the rising yield differentials between the US and Eurozone bonds. We are seeing German bond yields go back down again after rising following the US election rally that it even impacted the German bond yields, although now that we do have those firming expectations that the ECB will most likely go ahead and extend QE, that's creating fears that we may see some scarcity of German bonds, and those rising differentials are weighing in the euro-dollar pair. If we move on to the pound versus the dollar, we can see here that we had that big jump following the news that the British Prime Minister was open to the idea of having some sort of transition deal after Brexit to help UK businesses. It's since drifted back down again to around the 1.24 level. Markets will be keeping an eye out on the UK budget statement, where the new Finance Minister Philip Hammond will likely announce some measures, including possibly tax cut to the corporation tax, in order to support the British economy in the Brexit process. Although we're not expecting anything too drastic, given that the UK is still running a high deficit, so Philip Hammond will have limited room to maneuver there. Let's look at what's happening to crude oil prices, because yesterday they rose quite sharply, and it's back down. It fell quite dramatically on reports that Iraq and Iran are not happy about the deal, because at the moment both countries are not exempt from any production freeze or a cut. Its prices have rebounded a little bit, though they're still 2% lower from yesterday's peaks, and this uncertainty about whether there will or will not be a deal is likely to continue until November 30, where there will be a formal meeting between OPEC countries and Russia. In the meantime, coming up later today, we do have the weekly US crude oil inventories, so that will also likely have some impact on prices. Let's move on now to the Australian dollar, because although the Australian dollar fell quite sharply after the US election, it since appears to be attempting a rebound. We can see that since the start of the week, it's been rising. It did reach a near 5 months low on Monday. It's up almost 2% since then, and this is mainly, I guess, because due to the dollar rally having stalled, but also from a rally in metal prices, which Australia exports a lot of, so it's dependent on higher metal prices, particularly copper and iron ore and so on, and that's been boosting the Australian dollar. And those metal prices are still rallying, even though oil prices are seeing further volatility. Let's look at today's calendar. We already had Eurozone, French and German flash PMIs, which were a little bit, the German ones were a little bit, the manufacturing was a little bit weaker, the services was stronger. In France, the manufacturing was a little bit stronger, and the service also was well above expectations. So that suggests that the Eurozone-wide figures coming up shortly will also be on the whole positive. In the US sessions, we've got the durable goods orders coming up, and also the weekly jobless claims, as well as the flash manufacturing for the US. And also new home sales in the US as well. So all of the US data are mainly coming out today because of the Thanksgiving holiday on Thursday and Friday. So that's it from me. Thank you very much for watching, and have a great day.